Hello everyone and welcome in today's video. So today I'm trying to make sense of what's happening with Mr. Market and SoFi because I don't think Mr. Market makes much sense. So yesterday morning, SoFi reported its earnings for Q3 and everything was stellar. They beat on revenue and most of their metrics from customer growth to product growth to deposit growth. They beat on earnings and they raised their guidance. So it's a triple beat. This is a company that's doing really well. They're still not quite profitable, but EBITDA is positive, which is one step forward. And I think they'll be profitable probably within 12 months. This is a company that has been growing at a 50% clip per year and that will likely continue at 50%, growing at 50% going forward. One of the best in-class fintechs out there. And Mr. Market, as you can see, has rewarded this company by a minus 20% down over 2 days after the market in pre-market before the open on November 1st. The stock shoots up, rightfully so, because everything's so good. It's a triple beat. And then over the next 2 days, it just falls 20%. This makes no sense. It was the third quarter in a row that they beat on everything and raised. And almost every time it does that, this stock has been captured by traders, captured by short-term thinkers, and represents an opportunity if you're a long-term person. Because eventually Mr. Market will have to recognize that, or they'll just buy back their stock and keep buying back their stock and find other ways to return capital to shareholders. So Mr. Market right now is really acting like a voting machine. This stock is not popular. That's the reason why the stock is crashing, along with all of the other fintech, along with all of the other growth, along with anything that has to do with a future that is more than a few quarters away. And so why do I believe Mr. Market is behaving like a voting machine? Well, first of all, let's look at price to sales ratio. This is the cheapest you've been able to buy this stock ever since it's been public, at less than 3 times sales. Just for your information, up at Wells Fargo is trading higher than SoFi. Okay, it's not comparable, much bigger bank, long history, widely held. I get all of that. But Wells Fargo does not have a good reputation. It does not have an agile asset base. It's not agile. It doesn't have a good app. It doesn't have any of those things. And it's trading higher. Perhaps, most likely because it's in the benchmarks. And SoFi is not in the benchmarks. I would much rather invest in SoFi than in Wells Fargo. Much, much rather. So this stock is hostage of Mr. Market. Why else do I think the market behaves like a voting machine? Well, there is the SPAC stigma, the Chamath Palihapitiya stigma attached to this stock. It was one of his SPACs. So, of course, people are like all upset and they're not looking at the company itself and how well this company has been doing for the past 3 quarters. They are just selling across the whole SPAC sector and they are not distinguishing between the winners and losers. More people are shorting this stock than so many other stocks. 12% short interest. Like, why would you short? Why would you short any stock, especially a stock that has 50% growth? Why would you do that? The maximum upside is a 2x. That's your maximum upside when you short stock, but your loss could be unlimited. So makes no sense to me. Makes absolutely no sense to me. That's okay. And why else do I think the stock market is behaving like a voting machine? Well, like I said, SoFi is losing money. It's okay to lose money when you grow as fast as SoFi. It's okay to lose money when you have this crazy ability to disrupt an entire sector. SoFi, along with other fintech stocks. I could put Square in that category. I could put Ally Bank in that category. There's other fintechs that are about to revolutionize banking. But SoFi is clearly one of those fintechs. And therefore, it is losing money because it is investing heavily in itself. It's investing in marketing. And that means that they're not just profitable right now. And since the market only cares about the next quarter, they are dumping these companies. But SoFi, if you look at their profits, they may become profitable in the next 12 months, at most early 2024. So maybe the market will give them better valuation then, right? It's definitely a broken stock, but it's not a broken company. The company is doing so well. So Mr. Market can't ignore the catalysts forever. Mr. Market will have to recognize SoFi someday, because if it doesn't, SoFi will just buy back its stock, buy back its shares, return money shareholders one way or another, even go private. There could be many ways, but eventually Mr. Market comes back to its senses, especially as we become more, I don't like this word, more risk on, i.e., as we become more future oriented. You have to play to where the puck is going. The future is fintech. The future is not branches. The future is not traditional finance. The future is in fintech. It's so obvious. And I believe that Mr. Market will have to recognize some of the things that are going right at SoFi. For example, outstanding prior execution. Stocks that have great prior execution should trade at a premium. Like, that's just how it is. You know, they got their bank charters. Many fintechs didn't get theirs. They got theirs. They beat and raise their guidance consistently. They've done 2 amazing acquisitions. If you look at SoFi's back end, the Galileo acquisition, I think they have a shot at becoming the Amazon Web Services of fintech. Now, you may believe it's a 1% chance or a 5% chance or a 20% chance, but there is expected value that you should attach to that, right? I mean, they have some odds. They are in this competition, and the market is obviously giving no credit to SoFi. And then they overcame the student loan moratorium. It's like student loan moratorium was supposed to end 1.5 years ago, and they overcame that, right? They didn't blame the student loan moratorium for 2 years. No, they went into other avenues. They were agile. They pivoted. It's not like the auto companies, the legacy auto companies right now, who are just blaming supply chain over and over and over again, quarter after quarter. No, SoFi doesn't do that. They pivoted, right? So I think outstanding past execution is something that Mr. Market in 2025, in 2026 will value and will put into SoFi's market cap. Then the market will be able to better understand SoFi in January 2023, because most people in the financial community still view SoFi as the company that floods your mailbox for student loan refinancing. That is still the view that the market has, and thus the market sees that, oh, well, there's a moratorium, so the stock is down, even though the student loan business is not SoFi's core business anymore. It's not their main thing anymore. But the market still sees that way because the market moves very slow. So as they get back into student loans, the market will be like, actually, this might be a good business, and we might want to value the business a little bit. Then I find that they have astute marketing. They have a very, very smart marketing spend. Look at what they did with the SoFi Stadium. This is very smart marketing. This is a brand that is going to gain legitimacy, right? Most people, when they see, say, things like a stadium, like a $2 billion stadium, most people don't think that it's naming rights. The average customer doesn't think that it's just naming rights, right? They think that actually XYZ company built the stadium. This is an example of astute marketing. I think they have very, very good marketing strategies. Look at how they market their apps. Look at their mailing strategies. I think the marketing spend on SoFi is really, really, really well done. They're not doing it like other banks where it's like they have to give something like $1,500 for someone to sign up. If they bring in money. No, this is not how SoFi does it. SoFi does it, buy crypto with my app and you get $10. That's good marketing. That's great return on spend. And customers have a lifetime of spending with SoFi once they join SoFi. And SoFi's customers are young, very young. Nobody wants to change a bank. If SoFi is your first bank, you probably have a lifetime of business to do with SoFi. Then what else? Outstanding CEO. This is what I don't understand the most. It's like when you look at SoFi CEO, it has the perfect resume for Wall Street people. Like Wall Street people should just love the resume of the CEO. Goldman Sachs, right? The number one company in finance. Wharton, the number one business school. West Point, the number one military school. Like this is like the ultimate mainstream resume that a CEO could have. And they give absolutely no credit to the CEO. I love the CEO. Anthony Noto is great. I don't think he's great because of his resume. I think he's great because he actually runs the company really, really well. But Wall Street doesn't care about that. Yet Wall Street doesn't care about its CV either. Wall Street should care about the resume. Like this is just what Wall Street looks for. So I think the market will recognize that the CEO is outstanding. Then agile. Well, of course the market doesn't care about agile, but I find it so incredible how agile SoFi is. They can add all of these products. They have best savings account, best savings card, best trading platform. They have IPOs. Most banks still do not have IPO access for their customers. SoFi have that. They're about to have options. They have career coaching, advisors. I mean, this is just outstanding. How agile and how quickly this company moves. As the market moves so fast, as competition gets ever and ever and ever faster, a company like SoFi, that is a lean company with very few employees, with just an app, is a company that is going to be able to compete. And this feeds into the sixth reason why I think the market will recognize SoFi as a great company one day. It's a fintech. And fintechs are going to win over TradFi. I have little doubt about that. Look at Square. Square has something like 80 million accounts. 80 million accounts. And it got 80 million accounts in like 4 to 5 years. SoFi's account growth is growing tremendously fast as well. It is one of those main fintech players. And right now, of course, you'll have people in TradFi who say, well, it doesn't matter. Look, the average amount of money in those accounts is nothing. Well, guess what? Of course it's nothing. It's Gen Z. These companies are going after Gen Z. They're going after millennials. But Gen Z and millennials are smart. They are going to get jobs. They are going to get good jobs. And this is important. They care about an app. They want a super app. Like millennials, I do not think, neither do Gen Zs, I do not think they care about a network of branches. Like if you use cash for the one day that you have physical cash, which is the main reason for branches to exist, you just go to a Walgreens or a CVS and you deposit it as a Walgreens or a CVS with the many partnerships that exist to turn your cash into money in your account. That's what you do. There is no need for a network of ATMs and a network of places to deposit your cash anymore. Like this is over. And so millennials, they want to deal with an app. They want to deal with a super app, right? They want it easy. They want it fast. That's the future. And so what's going to happen? What's going to happen to TradFi, who has tens of thousands of branches with, for many banks, hundreds of thousands of employees, where you can't scale, you can't move as fast. And SoFi, you can scale, you can move fast. You make a change on the app, you roll it out to an entire market. So SoFi has so much to offer. And by the way, that's just the US. They also have international growth. There's so many aspects that a fintech like SoFi has to offer. And I do believe that fintech is the future, and the market is just giving no credit to these companies that right now are small, right now make no profits, but will have tremendous success in the future, I do believe. So in conclusion, I'm very tempted to invest in SoFi. If you invest in SoFi, be very careful. Don't do margin, right? The stock is almost down 80% in something like a year. So stay solvent, don't do margin. I'm considering leaps on a stock like SoFi. I think like it could be a really good really good trade-off between buying the stocks or buying the leaps. So long-term call options that you could exercise in 2025, January 2025. I think could be smart. Many people did that with Tesla and they got very successful. And so in my opinion, this stock is very, very, very undervalued, and I'm considering buying it. So, not investment advice, of course, but I love the company. I love the stock. I have been using them for about a year, and I think they stand a chance against any of the big fintechs, be them Square, be them M1, be them Robinhood. They stand a chance. They stand a chance, and they will be part of the next generation banking ecosystem. SoFi will be a part of that. And so today you have your Wells Fargo, your Citibank, your JP Morgans, key banks. That's the legacy system. In the future, you'll have a future fintech system in 10 years, 15 years. And SoFi, as they state, their North Star is to become one of the top 10 banks in the future. And I think this is a possibility for this company. So this company could easily 10x at a $5 billion valuation. They could easily 10x, in my opinion. Not investment advice. Never investment advice. This is just entertainment. Thank you so much for watching. Don't forget to like and subscribe. And I look forward to seeing you in the next video. Thank you.